ang decoration.
Ano kasi dad? Ano yung...
Natulog naman siguro. Okay, go.
Good afternoon, partners and colleagues, and welcome to the close to 500 stakeholders that have registered to join us for this online dialogue on green banking, physical risk assessment for rural and community banks, hosted in collaboration with the Bangko Sentral ng Pilipinas, or BSP, and WWF Philippines. This is truly a learning session for bankers by bankers. I am Marlon Joseph Apanyada, Southeast Asia Engagement Lead for Climate and Energy for the World Resources Institute, or WRI, and convener of the Greening the Banks initiative, which is the organizer of today's convening. I am honored to host today's timely and much anticipated webinar and learn more on climate-related physical risk assessment and management, featuring our esteemed resource persons from experts in the Philippines. Next slide, please. We start today's program with an introduction to the Greening the Banks initiative, to be followed by a keynote welcome message from BSP's Deputy Governor, Ms. Chuchi Fonasher, which we're all very excited to hear. This will then be followed by a presentation on the findings on impact of extreme weather episodes on the Philippine banking sector by BSP's Dr. Veronica Oni Bayangos. We will then hear more on identifying and assessing climate-related physical risks from WWF Philippines, Mr. Ed Tongson. And finally, we will learn from the Land Bank of the Philippines on what they have been doing to manage these physical risks within their operations. We will end our webinar with an open forum. So please feel free to send in your questions in the Q&A box at any point during the program. Next slide, please. The Greening the Banks initiative, or GTB, seeks to build the capacity of Southeast Asian public and private sector financial institutions, or FIs, to actively participate in green finance. GTB is led by Allotrope Partners with support from funding partners. Next slide, please. GTB organizes and leads public-private dialogues with banks and investors, financial regulators, and developers alongside civil society. For this webinar, we will be mostly focusing on building awareness on climate-related physical risks and building the capacity of Philippine banks, especially rural and community banks, to understand and manage the urgent financial and operational risks and opportunities that climate change poses to their portfolios. Next slide, please. We hope to frame today's discussion by emphasizing that there is already a consensus that climate change is a risk to financial stability. The risks from climate change have two main channels into the economy: physical risks and transition risks. We have previously tackled transition risks in our previous webinar, and today we will be focusing on physical risks, which stem from extreme weather events and changing climatic conditions, which in the Philippines include changing seasons, less rainfall, and increased temperatures, among others. This affects physical assets, agriculture, fisheries, and the workers themselves, which in effect lowers asset values and productivity. Banks exposed to affected industries and operation are then exposed to the risks of portfolio losses and defaults. Next slide, please. In 2018, Weather Bureau PAG-ASA published their report on projected climate change in the different provinces in the Philippines. It has also just recently published a report which highlights, among others, the impacts of projected climate extremes and how it affects sectors such as agriculture, human health, water, and infrastructure, which you may read up on to see the local effects of climate change. The Bangko Sentral ng Pilipinas itself has also conducted a study published last year on the impacts of extreme weather episodes on the Philippine banking sector using data from PAG-ASA and 92,000 banking units across the Philippines. We are so excited to hear about this, the findings of this report from its lead author, which we have as part of our esteemed panel of resource persons, Dr. Oni Bayangos, in her presentation later. Next slide, please. In the previous webinar on transition risks held last February 22nd, we gathered 3 action points from our resource persons on managing climate-related transition risks, which may be relevant even for managing physical risks. The 3 are as follows: fact-finding, building internal capacity and awareness of climate risks, and initiating dialogues with clients. Also, from our previous webinar, we learned that climate-related risks also provide opportunities for the banking sector. As banks help clients to be more climate resilient, banks create financing opportunities for climate adaptation and mitigation solutions, all the while contributing to the aggregate actions addressing the impacts of climate-related events on physical assets. We have today's webinar to learn more about this. Next slide, please. But first, survey results. If you can remember, we asked a few questions in our registration form, and this is to inform us and our resource speakers on the audience's familiarity on the subject of climate-related physical risks. From the results, we can see that only around 7% of the audience rate themselves as at least very familiar, and almost 15% of the room is not at all familiar. We also asked the question on the level of importance do you see for your banks to explore the concept of climate-related physical risks in greater depth. And from this, we find that over 50% of the respondents say that this is very important, with another 20% stating that this is extremely important. We hope that with this webinar, we can change your answers for both of those questions. And please feel free to use the chat and Q&A box to share your thoughts and questions anytime during the webinar. With this, we now proceed with the program proper with our keynote welcome message. Ms. Chuchi G. Fonasher is the Deputy Governor of the Financial Supervision Sector, which is mainly responsible for the regulation of banks and other Bangko Sentral ng Pilipinas supervised financial institutions. Deputy Governor Fonasher joined the BSP in 1984 as a bank examiner and worked her way to become Assistant Governor in 2017. DG Fonasher took up her Bachelor of Science in Commerce, major in accounting degree at the University of St. LaSalle, Bacolod. She obtained her Master in Business Administration, or MBA, at the Ateneo de Manila University. With this, let's welcome with An online round of applause. Bangko Sentral ng Pilipinas Deputy Governor Chuchi Fonasher for her welcoming remarks.
Yeah. Thank you, Marlon. I hope you can hear me loud and clear. Okay, thank you. Thank you once again for that very kind and generous introduction, Marlon. So to all speakers, participants, colleagues, and friends in the industry, good afternoon. I take great pleasure in welcoming you all to this second Greening the Banks virtual workshop organized through the collaboration of the Bangko Sentral ng Pilipinas and the Allotrope Partners. Last February 22, 2021, we successfully held the first webinar for commercial banks, which focused on understanding and managing climate-related transition risk. The webinar was well attended with around 150 participants from 30 banks. For this afternoon, I am glad to hear that we have around 500 registered participants from 130 thrift, rural, and cooperative banks. I would like to express my gratitude to all banks for your support, and of course, for Allotrope Partners for hosting this event and for its continued collaboration with the BSP as we mainstream sustainable finance in the country. Today's webinar session will focus on the physical risk part of climate change. Under the BSP Sustainable Finance Framework, physical risk refers to the potential loss or damage to tangible assets arising from climate change and or other weather-related conditions such as floods, typhoons, droughts, earthquakes, extreme weather variability, and rising sea levels. So being at the typhoon belt and the Pacific Ring of Fire, the Philippines is no stranger to these physical risks. In fact, we are one of the countries in the world facing the highest risk to climate change as identified by several climate vulnerability reports. We have been visited frequently by super typhoons and earthquakes. Likewise, the Philippine Atmospheric, Geophysical, and Astronomical Services Administration, or the PAGASA, has warned that climate change is happening now. Its key observations and climate projections in 2018 revealed that there is a slight decrease in the number of tropical cycles for the past 65 years, that is from 1951 to 2015, but with a minimal increase in the frequency of very strong tropical cycles exceeding 170 kilometers per hour. So these trends are projected to continue in the future. And true enough, for the past 7 years, the Philippines already bore the brunt of history's two most powerful typhoons to ever hit the Earth: the Super Typhoon Yolanda in 2013 and Super Typhoon Rolly in 2020. So these natural calamities left significant damages to infrastructure and agriculture, as well as loss of lives and livelihoods. So based on a 2009 study conducted by the Asian Development Bank on the economics of climate change in Southeast Asia, the Philippines, together with Indonesia, Thailand, and Vietnam, are projected to suffer an average loss of 6.7% of gross domestic product, or the GDP, annually by 2100 if climate change risks are taken for granted. The same study also indicated that if the four countries would invest 0.2% of GDP to climate adaptation efforts, they could avoid an annual damage equivalent to 1.9% of GDP by 2100. So these compelling facts and figures support the need for us to step up efforts and act with urgency in managing the potential impacts of various physical risks. So Philippine banks are not immune to these risks. The direct effects of climate change risk to banks, coupled with the indirect effects to their clients and other transaction partners, could affect the operations and financial health of individual institutions and the whole economy. So this is confirmed by the study conducted by the BSP on the impact of extreme weather episodes on the Philippine banking sector. Later, you will be hearing the details of this study. But why should thrift, rural, and cooperative banks be concerned about climate and environmental related risks? First, there is a need for banks to recognize that the potential impacts of climate change are immense. And these impacts include major changes in rainfall patterns and distributions, threats to the natural ecosystem, declining rice yields, increasing intense droughts, rising sea level, and water scarcity, among others. Second, the transmission of climate-related physical risks might weaken the interdependencies of banks and the community they serve, and in turn affect the operations and financial condition of banks. So the thrift, rural, and cooperative banks cater mostly to the agriculture, forestry, and fishing sector, and the micro, small, and medium enterprises, or the MSMEs. So these are also the same sectors which are exposed or vulnerable to physical risks. And it may be recalled that the BSP provided regulatory reliefs to banks, which are located in areas affected by calamities, to assist such banks in the recovery and allow them to resume normal operations. However, these are only temporary measures. It is therefore critical and urgent for thrift, rural, and cooperative banks to begin their journey of understanding climate physical risks, build capacity on how to assess and manage the same, and integrate this process into the existing risk management systems. Understanding and deepening our knowledge level in this topic could also translate to the continued provision of finance to agriculture and the MSME sectors and the entire community on a sustainable manner. And meanwhile, the BSP on its part formalized its sustainability journey with the adoption of the sustainable central banking as one of the strategic priorities in November 2019. And this is to show the BSP's commitment to championing the sustainability agenda in the financial system by fostering environmentally responsible and sustainable policies and work practices. So the strategic program involves continuous awareness and capacity building programs for BSP officers and staff, and the conduct of vulnerability and self-assessment exercises that will feed to the development of the BSP's roadmap for sustainable central banking. So the ongoing vulnerability assessment generally aims to determine the potential impacts of climate and environmental risk to BSP to aid in the development of risk mitigation measures and action plans, and the promotion of a sustainable and climate resilient transition in the BSP. Moreover, the BSP is collaborating with the Worldwide Fund for Nature, or the WWF Philippines, in pilot testing and analytical framework to integrate climate risk in banks' risk management frameworks. So this initiative, however, will require the participation of volunteer banks. And we believe that this initiative could benefit many banks and enable them to link the results of the exercise to their stress testing, capital and liquidity planning processes, as well as disaster and recovery plan arrangements. Indeed, there is so much more to learn and so much more to be done in promoting sustainability in the financial system. Your participation today is a critical step towards that objective. So in this webinar, we are honored to have distinguished leaders and experts to share their experiences and insights in identifying, assessing, and managing physical risks. So I look forward to your fruitful and interactive discussion this afternoon. Thank you and keep safe, everyone.
Thank you so much, Deputy Governor Chuchi Fonasher, for your comprehensive, insightful, and eye-opening welcoming remarks, calling everyone to step up efforts and to begin the journey and build capacity. Thank you so much, DG Chuchi. Thank you so much.
Most welcome,
And
Marlon. Yeah.
okay, so with that, this afternoon, we have three truly amazing speakers and resource persons joining us today. But before we proceed, we would like to remind you that you can send in your questions for the open forum at any point during the presentations. With that, we welcome, as DG Chuchi mentioned, the findings of a key BSP study. We welcome Dr. Veronica Oni B. Bayangos. We can call her Oni, and she is the director of the Supervisory Policy and Research Department under the Financial Supervision Sector of the Bangko Sentral ng Pilipinas since January 2018 and is currently reassigned at the BSP Research Academy. Dr. Bayangos was previously the director of the Center for Monetary and Financial Policy from July 2015 to December 2017. With an MA and PhD in Development Economics from the Erasmus University in Rotterdam, the Netherlands, she is also a member of the Netherlands Research Council Technical Working Group on Sustainable Finance and co-chair of the Alliance for Financial Inclusion's Inclusive Green Finance. Dr. Oni, the screen is now yours.
Thank you very much, Marlon, for that very generous introduction. What I will do in the next few minutes or so is to share with you the results and findings of our study, which was released in last year, actually at the height of the pandemic. What I will do in the next slide is that I will share the merits of the study or the motivation of the study. Yes, and then I will share the data that we used, including the branch level data and the rainfall profile that we used, and then the methodology, finally the findings. And then I will also share some key takeaways for policy, along with some implications for the BSP Sustainable Finance Framework. If we can move to the screen on the Philippine case, right? DG Fonasher explained the motivation actually for using weather episodes in the Philippines. Basically, what this slide says is that the Philippines are very much susceptible to extreme weather episodes. I'd like to go back to the kinds of climate change risks that we can see in many studies and literature. Apart from the physical risks and the transition risks, we also have the third risk, which you can get from many studies now. It's called the liability risks, which actually come from people or businesses seeking compensation for losses they may have suffered from either physical or transition risk or both from climate change. Now, this is similar to an insurance risk. Now, our study focuses on extreme weather episodes. I would echo our Deputy Governor's statement earlier on that the Philippines is one of the most vulnerable countries in the world to natural extreme events based on several global disaster risk reports. For instance, apart from Typhoon Ondoy in 2009, we also suffered from Typhoon Yolanda or Haiyan in 2013. And finally, in 2020, we also suffered from Typhoon Quinta, Rolly, and Ulysses. Is that the impact on the economy and on the people are all massive. If we will move to the next slide on the data that we used for this particular study, one is on the branch level data coming from branch regional information system. For this particular data set, we used 11,000 data from 11,000 banking units. And our data actually covers the period Q1 of 2014 to the last quarter or Q4 of 2018. Now, this banking data, if you will look into your screen, are disaggregated by regions and by branch level information on assets, loans, deposit liabilities, net interest income, net profit, and related indicators. But what we can see or what we can digest from this type of data set is that by industry, the universal and commercial banks dominate the total number of reporting banking units in our data. They comprise nearly 65% of the data set per quarter. Now, in terms of assets naman, these UKBs are estimated to have aggregate assets ranging from 10.2 trillion to 15.3 trillion from 2014 to 2018, closely approximating the recorded industry total for the period covered. Now, in terms of geographical location or reach or network, majority of the bank branches or offices are located within urbanized regions, with Metro Manila or the National Capital Region having the highest concentration of banking units for all the years covered. For instance, the NCR, which has over 35% of the total banking units in its jurisdictions, are actually Central Luzon and the Calabar Zone regions with 10.6% and 13.7% respectively. These two regions, which are adjacent to Metro Manila or NCR, are also the popular locations for our rural and cooperative banks as well as the thrift banks. Now, this is in contrast to the autonomous region of the Muslim Mindanao or the ARNM, the Cordillera Administrative Region, and Eastern Visayas regions, which consistently have the least number of banking offices. An important thing to remember in this data set is that it gives us branch level data. Now, if we can move to the next slide on the data, on rainfall data came mainly from our PAG-ASA or Philippine Atmospheric, Geophysical, and Astronomical Services Administration. And the figures or the charts that you will see are actually the average rainfall data for 2014 and 2018 for the entire Philippines. What we can see from the slide or from the chart is that the regions at the upper northwestern and southeastern parts of the countries are prone and had the most or the heaviest rainfall relative to other regions. These are the same areas that are frequently visited by tropical typhoons, again, which is not surprising given their proximity to the Pacific Ocean and the natural trajectory of typhoons in the Philippines. We should also know that typhoons usually move east to west across the country, heading north or west as they go. Storms most frequently make landfall on the islands of Eastern Visayas, Bicol region, and Northern Luzon, whereas the southern and the region of Mindanao is largely free of typhoons. recently we've noticed that Mindanao is most susceptible to earthquakes. Now, one of the earliest studies done on the Philippines typhoons placed the annual average landfall of typhoons in Bicol and Eastern Visayas to be around 1.9. So these regions are highly susceptible to extreme rainfall episodes. What we can also see from the slide is that 2018 has the most regions with dark blue shades or the greatest number of extreme rainfall episodes compared to 2014. Now, so what was our methodology? If we can move to the next slide. Our methodology is simple enough. In order to measure the impact of intense rainfall episodes, a rainfall damage index was constructed based on the author on extreme weather episodes. The rainfall index shows the hurricane, follows actually the hurricane destruction index proposed in that paper. But the hurricane destruction index considers a damage function that produces positive values only for wind speeds in excess of a specified threshold. But what we have done in this paper is that we substituted yung excessive wind speed with excessive amount of rainfall to replicate the episodes we experienced during the typhoons Ondoy and Habagat in 2012. Now, then we use panel data econometric analysis. If you recall, we have branch level data. So what we've done is that we simply estimated the relationship between the rainfall damage index and the bank performance, which I showed earlier on. So the bank indicators that were included in this panel data analysis were the growth of loans, deposits, non-performing loans, and profitability. So what are the key findings? I have here three major key findings of the study. What we have found out is that the growth of deposit liabilities are significantly affected by extreme rainfall event on a contemporaneous manner, so simultaneous with the experience of extreme rainfall affected agad ang deposits ninyo. Now, ng bangko. Now, this result is intuitive, as individuals would likely keep or withdraw their cash in times of a disaster as a precautionary measure. Now, in terms of loans, loan growth was also affected by extreme rainfall. Now, in terms of asset quality, the growth of non-performing loans is also driven by extreme rainfall events, with the impact coming in early as 1 or 2 quarter lag. So in 1 quarter or 2 quarters, we would already see the weakening of asset quality via higher non-performing loan ratios. Now, this implies that those affected would use their liquidity for more urgent needs rather than to pay loans in the case of this major finding. Now, in terms of profitability naman, extreme rainfall events have a negative influence on the net profit of a branch ng bangko. But what we have found out in this study, which is for me very important, is that yung impact ng extreme rainfall episodes on the profitability fades after some months. In other words, the branch of a bank easily recovers from the impact of extreme weather episodes. Now, we've also found a strong negative impact on rural and commercial banks, specifically because this, as I mentioned earlier, on branch level data. So most of the branches that we captured in this study are branches of rural and cooperative banks. Now, we found out that the impact has it has a strong negative impact on these banks, and the impact is channeled through loans and bank deposits. So the same as our main findings, which I mentioned earlier on. Now, given this impact, ano naman yung key takeaways natin for our policy? In the next slide, I have here 5 major key takeaways for policy. Obviously, the financial system going, even those branches of banks in the provinces are not impervious from the effects of natural disasters. I think that's the main key takeaway of this study. Second is that yung role of regulatory relief in extreme weather episodes should still be revisited in this finding, because we didn't find a very significant role of regulatory relief, which the BSP issued from 2014 to 2018, possibly because not all banks availed of the regulatory relief. So we should dig deeper into the reasons on why banks, after experiencing extreme weather episodes, do not actually go to the BSP for regulatory relief. So that's one aspect that we should also be revisited. A third key takeaway is that yung data availability as well as quality can be improved. At the moment, this data set is being reported to the BSP on a quarterly basis. If we can have more frequent data, then it would be better. A fourth key takeaway is that the proper accounting and recording of past due loans related to extreme weather episodes should also be improved. Although, understandably, if you suffered from extreme rainfall episodes, the chance that the recording or proper accounting is either delayed or sometimes there are some slippages is understandable. Nevertheless, we should first ensure that the quality of data is okay. And the last but not the least, a key takeaway is that given the impact of the extreme weather episodes, we should also target the integration of sustainability principles in the corporate governance and risk management frameworks of banks. Now, in the next slide, what we can see here is a slide of sustainable elements of the Sustainable Finance Framework, which was issued in April 2020. So given the impact of extreme weather episodes, it's also timely and relevant if we will underscore the role of board of directors and senior management in adopting a sustainable finance framework. Specifically, the role can be seen in the promotion of a culture that fosters environmentally and socially responsible business decisions and ensure that sustainability implications are considered in the overall decision-making process. Now, another element that was underscored in the framework is the environmental and social risk management. We expect banks to enhance their understanding and technical skills of bank personnel on sustainable finance. We also expect banks to monitor its progress in attaining sustainability objectives and ensure operations and personnel performance are also consistent with the objectives. And lastly, an important component of the framework is transparency. We expect clear communication on sustainability objectives and policies across the institution or across banks. We also expect banks to convey objectives to stakeholders through adequate disclosures in the annual report or other documents. So that ends my presentation, Marlon. Maraming salamat po.
All right. Thank you very much, Dr. Ani, for sharing the unique insights gathered from the study. We see that there's already some questions for you, but we'll revisit that in the open forum. And as banks are not impervious, as you said, from the effects of natural disasters, your recommendations for banks to strive to promote a culture that fosters environmentally and socially responsible business decisions while enhancing the internal capacity of the bank to undertake sustainable finance are truly welcome. So may question ka po later sa open forum po, Dr. Oni. But at this juncture, we will welcome Mr. Ed Tongson to discuss ways to identify and assess your bank's exposure to physical risks. Mr. Ed Tongson is currently the Chief of Party for Sustainable Finance of WWF Philippines and leads the Philippines team as part of an ASEAN regional initiative with financial institutions to channel financial flows to support the Paris Agreement and to achieve the SDG goals. So, Sir Ed, the floor is yours.
Thank you. Can I share my screen?
Yes, we can hear you very well, sir.
Thank you. Good afternoon, everyone. Just a short thank you, Marlon, for the short introduction. WWF has crossed from working with conservation areas towards banks. Primarily, we've seen for the past years that much of the deterioration of our environment is due to economic activities that are financed now by big and small banks. So for our work in the Philippines is focused first on commercial banks. We develop a series of training webinars in the past 3 months, and we are soon will be announcing the launch of our e-course for banks, not only the commercial banks, but including rural banks and the chamber of thrift banks. So this would cover most of the banks in the sector. So for this webinar, I've been asked to present our work on climate risk assessments. And I'm taking my slides from our February 3 meeting with the BSP and the representatives of the different associations, including the Chamber of Thrift Banks and the Rural Bank of the Philippines and the BAP. And in that meeting, I introduced an analytical framework where banks can assess their climate risks and integrate this into their risk management systems. And this was driven from what was explained earlier from the BSP Circular 1085, which requires these FIs to map and manage climate risks and to integrate this into their ICAP, Internal Capital Adequacy Assessment Program. And this pilot work aims to produce evidence to inform the issuance of future guidance on risk metrics, followed by implementation guidelines. So this is by the BSP. And the use of maps and methods, which I'll present later, will facilitate the aggregation of risk metrics. So banks may be able to look at these metrics from a bank-wide perspective, and this can be rolled up for the regulator to assess impacts at the sector level. And of course, this is driven by the need to better understand climate impacts on internal risks models, and this was explained earlier from our previous presenters. So this is a two-step framework which aims to integrate the ESG and climate-related risks into the bank's internal risk management framework. And my aim here is to engage the banks to pilot the methodology, to test it, and then to inform the development of evidence-based implementation guidance by the BSP. Of course, we have in this audience banks from the Chamber of Thrift Banks and the RBAP, and hopefully this would foster wider adoption by the respective member banks. So the analytical framework of identifying, first we identify climate risks. And we mentioned climate, it's focused on flood typhoons, uh, global warming, heat stress. We also include earthquakes, although it's not climate related, it's a significant threat also to the system. And the coverage of this assessment covers the entire business lines of banks. And I got this from the bigger banks. So there's the consumer banking, which deals with consumer loans, housing loans, vehicle loans, even educational loans, business banking, which lends to SMEs, even to LGUs, corporate banking, which lends to big corporations, even conglomerates, etc. And investment banking, who looks at funds at the capital markets, raises funds through those markets and channels these to different areas in the Philippines. So these are the business lines that that are covered, no, in the use of this tool. Of course, these assets focus on physical assets because the risks are impacting on physical assets in the first place. And this can be found in all the business lines through mortgage loans, project financing, infrastructure loans, real estate, bonds with no use of proceeds, and even the internal assets of the bank, these owned buildings and ATM machines, branch infrastructure, and so forth. And as was mentioned earlier, that banks are now required by the new finance circular to develop their sustainable finance framework. So climate risks is not separate from this. It is an integral portion of the climate of the sustainable finance framework. And here we start with banks asking which portfolios do we start our assessment, meaning to guide you from which portfolios do we derive the volumes of our business? Where do we make the money most? So this is a way to prioritize where should we start. And if you look at the different business lines, all of them will have the respective portfolios to investigate. And the next question, and where are these assets that are tied to these portfolios located? So here it is important for banks to locate assets in specific places in the country. For the primary reason is that climate risks are very much localized, and this is an important input to be able to develop your sustainable finance framework. It's not only the climate risks which are investigated in this assessment, but here we also look at the SDG priorities, the SDG needs of a locality. So this is also part of the mapping of the sustainability targets of the bank, identifying where the priority sustainable development requirements lies. And once you have identified these locations, it is important for banks to group their lending to the sectors that are delivering on these SDG objectives. And most of these are in agriculture, in the case of our rural banks, smaller banks. And some of this goes into infrastructure projects, including buildings, vertical and horizontal housing developments, or to power, transmission lines, etc. So there's a host of sectors that are where this impacts, both the sustainability impacts and the climate impacts can be located. And next, identify what are the needs of the banks. First is what are the sustainability targets that you need to look at, investigate to make a real impact on the locality. And next is what are the risks that are impacting on your assets found in that locality. So the important question is, are banks able to locate where their assets are located? And are they able to categorize their lending to the different sectors? So later on, I will ask these questions in a poll, because in most of the pilot work done abroad in assessing climate, they run into difficulties in finding the data on the where and the what. No? And so this is, I think, an important element in developing a sustainable finance framework. Now we go to the climate part, the climate risk part. Now, when you assess the sectors and the hazards that are impacting on this sector. See here, we have the pie chart taken from the BSP reports, no, 2017, where most of the lending happens, and it's grouped according to, in this pie chart, first with the real estate in blue, followed by wholesale, retail, manufacturing, electricity, household consumption, transport, etc. So these are the what you call the standard groupings, the industrial classification systems, no? The system of classification that the Philippines uses. It's important to know sectors because each sector will have its own risk sensitivity, meaning some sectors are more sensitive to a particular climate risk. And for example, real estate is more sensitive to flooding, earthquakes, etc. While agriculture, food-related agriculture, even hydropower are sensitive to drought, to rainfall variability. So it is important to identify which particular loans goes to which particular sectors, and this is part of the data that's needed, not to be generated from this pilot uh, pilot work. And of course, going back, we link this to Basel II, where you have banks are now instructed, and this is part of the past guidance given by BSP for banks, that to compute their expected credit loss exposures, and then to manage these exposures by means of mitigating the risks, by means of controls, and whatever residuals emerge is to provide capital provisioning and non-loss provisioning to those residual risks through your ICA app. So from this presentation, we will present a new set of risks coming from natural events. These are the earthquakes, floods, typhoons, drought, warming, and sea level rise could be grouped into, could be classified as slow onset events, but they do materialize in several sectors that will affect the financials of the bank. And of course, we're talking about health, labor, other sectors that are dependent on temperature. Controls, this already you do through your risk management system. It goes back to looking at your underwriting practices and your retrofitting strategies with your partners when it comes to strengthening the buildings, for example. And what was mentioned, that insurance is an important component of this framework because it is a means of reducing the liabilities arising from damages. And of course, loan maturity is one of the controls that you use to be able to manage these risks. So, and for the loan loss, capital provisioning, you can refer to the past guidance, but for this new set of risks coming from ECL exposures from these types of events, this guidance will have to be reviewed. So as I mentioned, this is a two-step process, two passes, meaning the first step is to identify the bank exposures. So under this step, it answers the following question, and this is mostly what the board is asking right now for the respective management. What is the impact of climate to the bank's business? What is the exposure of the bank to climate risks? What are the cities and which are the sectors where these risks are concentrated, for example? So through this methodology, we hope to provide the answers to those who are seeking answers to these questions. And after the first pass, one goes to the second pass, and this is still early days. It's still work in progress. It has to do with quantifying the risks generated in the first pass and looking at how this could be converted into several parameters like probability of default, loss given default, expected credit loss for each of the assets as required under the Basel II statutes. And to see how these credit losses could be grouped by geography, sector, business lines. So, and this aggregation would happen at the bank level and also would be happening at the sectoral level. And finally, what are the implications to loss provisioning and capital adequacy requirements? So that is the second pass. I would be talking about the second pass, but I will just focus on the first pass, which looks at how you first select the portfolio of your business line. First, we look here at where the largest volumes are generated, which cities and sectors. This is the Pareto principle, the 20/80 rule. Then look at this portfolio and see where these locations are in your Hazard Hunter app. And I'll explain this is as a tool generated by, it is made available by the government for the public to locate and plot the risks to a particular asset. And when you plot the location of an asset, it will generate a report. It will, in that report, that report will identify the significant risks, whether it's exposed to flooding, strong earthquakes, or landslides, etc. There are a number of risks that are covered in that app.
Sir Ed,
Yep.
sorry to interrupt. As advised, 5 minutes left.
Okay, thank you. So this is the map. I won't discuss this. You can play around with this. But in this application, you will have severity classes for each of the hazards, and we're focusing on the main hazards. And these severity classes can be normalized into low, moderate, high, very high. And finally, when you classify your loans into these severity classes, you will be able to visualize them using heat maps. And I'll show an example of this later on. And you will have copies of these slides. Here's a list of the maps that can be generated for each particular hazard. And here is an example of the flood map. And this is validated by the satellite map in the middle and the NOAA map on the right, which just looks, there's very close resemblance of these models with what is observed by satellite photos. And here, what you don't find in Hazard Hunter is a drought map from the publication that was earlier presented by Allotrope. And here's a sea level rise map of the Western Manila, where in 2060, under the most likely scenario, several parts of Metro Manila, Manalabo, and Navotas will be subjected to sea level rise. So here the legends are grouped, and these are the summaries of the legends that are found in these maps. And what the bank can do is slot in the value of the assets or the loan outstanding of the assets to each of the respective groupings within the respective hazard area. And to be able to normalize this across the different risk areas, I built this table so that you could use the same color codes for the different hazards, meaning earthquake, typhoon, wind speed, flooding, and drought. I include drought in this because most of the banks that are listening to this webinar have exposures in the agricultural sector. So this is a way of visualizing your assets in terms of their exposure to these different types of hazards and to their severity. And each asset will have its respective colors, and each color will differ depending on the type of hazard that are impacting on that asset. And then finally, you can group these assets by geography or by sector. So you have this table looking at where the concentrations are for these particular risks by sector and by geographical area. So this gives you a visual representation of where the climate risks lie. So this is the overall output of this of the first pass of this analytical framework. And I would enjoy the banks to try it out, to try out this process and give us feedback if this is a framework which works for you. And if there are difficulties in data, we'll see how we can tweak the methodology to suit the requirements of the banks, no, in this webinar. So with that, I end my presentation, and I would like to take a poll on and ask the following questions. What we want to see if the banks are able to generate the data required to test this methodology with respect to the location of the assets and also to the sectors that have to be generated as part of the steps. So here is the question: how difficult is it for the bank to pin the location of physical assets in your loan book, focusing on mortgage, collaterals, etc. in the map? And there are 5 choices. And number 2 deals with economic sectors following the Philippine Standard Industry Classification City. Same question if it's very easy, etc. down the spectrum. So I'll leave it up to you to fill this up, and hopefully we'll get the results later on by the end of the session. Thank you.
Okay, thank you so much. And then we have more than 400 stakeholders here, and we'd really love you to answer these 2 questions because this will also inform us and support a lot of the insights that we've already gathered so far. All right. With that, thank you, Sir Ed, for your insightful and comprehensive remarks as always. Those heat maps and then those visualizations are very important, and we at the Greening the Banks team are truly honored to work with you on this webinar. All right, and then at this juncture, let us now hear from Mr. Jojo Diaz on what Land Bank of the Philippines is doing to integrate these risks into their decision-making process. Mr. Jojo Diaz has been with the Land Bank of the Philippines for 25 years, and he is currently the program officer and team lead for Southern Luzon and Southeast NCR under Land Bank's Environmental Program and Management Department. Mr. Diaz was previously the team lead for Mindanao, as well as the chief environmental specialist in the said department. He holds a master's degree in business administration and is also a licensed environmental planner. Sir Jojo, please share your screen and the floor is yours. Do we have Sir Jojo?
Yeah, good afternoon. Kita na po ba yung screen?
Yes, sir. We can hear you and we can see you po. But we cannot see your screen yet.
Okay. Screen share. Okay.
We can also screen our share. We can share our screen from our end, Sir Jojo, so that you don't have to. Okay, and then just tell us to go to the next slide.
Okay, sige.
Perfect. All right.
Okay. So, good afternoon, everybody. We would like to thank GTB and Allotrope Partners for giving us the opportunity to share the bank's environmental and social safeguards initiatives for our lending activities. Okay, so next slide, please. Okay, so my presentation includes Land Bank's conduct of environmental and social assessments for projects that we finance and environmental and social safeguards program benefits. Next slide, please. So Our environmental protection initiative is embedded in the bank's vision, mission, and corporate environmental policy. And we have established a permanent environmental program and management department who conducts environmental and social assessments for projects financed by the bank. Okay, next slide, please. So as you can see, EPMD in the organizational structure of the bank, it is under the agricultural and development lending sector under the lending program management group. And we have a complete staff, dedicated staff who conduct environmental and social assessment for the projects that we finance. Next slide, please. Ayan. So, EPMD conducts environmental and social assessment, monitor and evaluate the environmental and social performance of bank finance project, including environmental and social benefits. And we provide our credit committee and investment lending committee annual status report, while we provide semi-annual ESBD report for our ADLS head and lending groups. We also conduct trainings and provide updates for lending units personnel to effectively implement environmental and social safeguards policies. Okay, next slide, please. Our lending units ensures that all projects of loan clients or borrowers conform to environmental and social regulations and requirements. Non-compliance with applicable environmental and social laws and regulations shall be considered a condition of default. Okay, next slide, please. So we have been practicing environmental and social safeguards for projects financed by the bank since 2004. And we periodically update or enhance our policy as the needs arises. Particularly last year, the BSP has issued Memorandum Circular 1085 on Sustainable Finance Framework, and we have to align our environmental and social safeguards policy relative to credit delivery. Next slide, please. So our policy on environmental and social safeguards are anchored on these enabling reference documents, PD 1586, DANR AO 2003-30, EMB Memo Circular 2014-005, and recently the BSP MC 1085 series of 2020 on Sustainable Financial Framework. Next slide, please. So why assess or monitor environmental and social compliance of bank finance projects? Our main goal is to avoid financial or credit risk. So we provide our clients with reports containing environmental and social impacts and advices or recommendation for them to avoid or mitigate being issued a penalty by DNR or the cease and desist order will greatly affect their project. Okay, next slide, please. Next slide, please. Okay, so I'll discuss land bank environmental and social safeguards. Our policy covers all projects under the Philippine EIS system, including collaterals, which are part of the project. However, we do not conduct environmental and social safeguards for projects financed by cooperatives, particularly those engaged in relending and rediscounting lines, and countryside financial institutions. Next slide, please. So we conduct environmental and social assessment both on category A project and category B and C projects per PIS system. And the only difference is that EPMD report is provided prior to release of loan for category A project, and for category B and C projects, it is provided after our assessment. Next slide, please. Okay, so our lending units request assessment from EPMD, and we conduct monitoring based on the risk rating. For projects with risk rating less than 50%, we conduct a desk review. And for projects with risk rating more than 50%, we conduct actual site assessment and project monitoring. Next slide, please. So for medium and high risk projects, we conduct environmental and social assessment in close coordination with our lending units and the project proponents or clients to determine the project site sensitivity on environmental and social issues. So we look at the presence of critical natural habitats near the project site, kung meron bang mga existing rivers or bodies of water that will be affected by the project once we implement the project. We also take into consideration the water quality or resource availability and use in the area and the presence of physical cultural property. We also take note of the settlements or the people living near or within the proposed project site. And lastly, we also consider the presence of indigenous peoples which will be affected by the project financed by the bank. Next slide, please. So for the assessment of vulnerability to natural hazard or climate change, we look for the effect of drought or El Nino and determine its impact to the project. We also take into consideration flooding or La Nina and landslides, may it be rain-induced or earthquake-induced, sea level rise, typhoon and heavy rains, earthquakes, volcanic eruptions, and storm surge. Because all of these natural hazards can greatly affect the project. And we are using available assessment tools or online applications which we can easily access in the internet. So we are using the Manila Observatory maps to determine the flooding. And we also use the Philippine Heritage map.org to determine the presence of physical cultural properties near the project site. And for the population density, we use the PSA statistical data, and we also use the landmark.org for determining some hazards that will be affecting the project. Next slide, please.
And Sir Jojo, last 2 minutes po for our presentation.
So these are also available in the internet. We use the NOAA and Hazard Hunter georisk.gov.ph to determine the adverse effect of El Nino or drought, flooding, landslide, sea level rise, typhoons and heavy rains, and storm surge. And we provide this data to our lending units to help them evaluate the risk of the proposed project. Next slide, please. So we also determine the environmental impacts, social impacts, environmental compliance, and social compliance of our client. Okay, next slide. And we rate the project based on these criteria, particularly the project site sensitivity or vulnerability to climate change, which we give 20%. Okay, next slide. The account officer ensures compliance of the account projects with applicable environmental and social laws and regulations until such time that the account is fully paid. Next slide, please. Okay, so these are the highlights of 2020. We conducted a total of 446 accounts or project assessment. No bank finance project was issued a cease and desist order. Our ENS safeguards contributed to the reduction of credit risk. And we also received awards for implementing environmental and social safeguards on our lending activities. Okay, next slide, please. And these are the benefits realized from the policies, programs for the environment. Financial savings, employees understand and are able to mitigate the impacts of their jobs to the environment, better compliance, reduce environmental and health risk, better company image, improve relationship with regulators, and improve access to financing and international market. Okay, next slide, please. So that ends my presentation. Thank you very much for listening and watching my presentation. And magandang hapon ulit sa aming magigiting na partners in the countryside. Maraming salamat po.
Thank you, Sir Jojo, and we are so privileged to have you as part of our esteemed panel of speakers. So we are now at the juncture of our open forum, and I will invite Dr. Oni, Sir Ed, and Sir Jojo to turn on your videos should there be questions for you. But in the at this juncture, we will show you the poll results. Okay, so we have on the first question, how difficult is it for the bank to pin the location of physical assets in your loan book? Majority are really saying a little difficult and very difficult. A little difficult, right? Although there's also significant numbers, or Ed, saying moderately easy and very easy. So I can say it's like 49-50 for like 50-50, right? From the poll. And Gabs and Ivan, can you remind me how many answered the poll results? On the second question, how difficult is it to classify these assets into economic sectors following the Philippine Standard Industry Classification System? there's a plurality on it being a little difficult or very difficult. All right. So we will share these poll results in our key takeaways as well. And I'm happy to share that more than almost 60% of you answered the poll question. So we had 230 people answering the poll questions. All right. So for my we have seen questions in the open forum, and Dr. Oni has kindly answered them live, a few of them, as you can see from our question and Q&A box. One of the first questions that I have is with Sir Jojo, relating to what Sir Ed is saying. Sir Ed and Dr. Oni, can you turn on your videos? There was a point on the first pass and the second pass, like the climate risk mapping, and the second pass on the quantification of risk, right? Has your department specifically done this, or you are doing it on a different system?
Yeah, we are doing it on a different system. First, we study the area through the available applications such as the Hazard Hunter, the Manila Observatory Map, and then we conduct ground truthing or actual site visit with our account officers in the field to determine whether the project is really affected by floods, drought, or other natural calamities.
And Sir Ed, this is like this is like customizable depending on the bank's operations, right? Like the first pass and the second pass that you mentioned. Can you elaborate on that further?
Yeah, I mean, these tools, what Jojo mentioned, are available in the internet for free. So if banks want to identify what particular risks are impacting on an asset, they can refer to these mapping tools. And what they do is, with this information, they go through their existing internal risk rating, credit management systems, how it functions. It's really, they don't have to change or overhaul that system. It's just slot in this risk into the several risk categories. Well, is it whether it's impacting on operational risks, meaning the bank's operations, whether it's impacting on the credit, meaning does it compromise the ability to collect payments on the loans? Does it also affect market risk, meaning customers are changing preferences so that they affects their choice of buying a property, for example, in a flood risk zone? So those are the type of risks that are assessed internally by respective banks, and they have their individual customized systems of scoring and assessing this risk. So these are very much internal to the bank. And what we're doing is just presenting their sources of information from which they can generate greater information for their own system, generate new information for their use.
And so, like, especially for our audience today, which are the smaller community banks, cooperative banks, thrift banks, how do we make sense of all these tools that are already available everywhere, and making sure that they're accessible and they're able to use it in a cohesive manner wherever they are?
Well, some of the banks are already using these tools even before we introduced this in the webinars. Many of them have been since this was launched by the government. Many of them has already embraced these tools and use it in their ESG scoring. No? Many of the banks, what I've encountered are the commercial banks. They use this tool as part of their initial scoring of their clients, and then it becomes now part of the risk management process, no? That they already have, no? Existing respectively. So that's already there. They have their internal systems. It's just working with what you have, starting with what you have, and working with the same people who are doing these assessments. So it's just getting a new set of sources of risks, no, and putting this in place into the respective models.
Yeah, I know Dr. Oni is very busy typing her answers to the live questions, and we appreciate that, Dr. Oni, especially on the question on the insurance side. While you're typing that, I'm curious to hear your thoughts on one of the key takeaways for policy that you said in the presentation. Can you expound more on this statement on the role of regulatory relief in extreme weather events being revisited? What does it mean? Because I also took note that from the presentation, banks do recover quite, fast, as you mentioned, after an extreme weather event. What does it explicitly mean, or would you be able to provide some guidance on that statement?
Yeah, thank you. Thank you, Marlon. Actually, that's a very interesting finding in our study. What we've done is that we documented the number of banks which availed of the regulatory relief in relation to those natural disasters from 2014 to 2018. But what we found out is that there are few rural banks who actually availed of the regulatory relief. It's either the thinking is that it's either that they are prepared for the impact of their natural disasters, or they simply do not need a regulatory relief, right? So that's a very interesting finding. So I think, but we will continue to monitor the impact of regulatory relief in this particular study, and then maybe engage the banks on the tangible reasons why regulatory relief is not really regularly tapped whenever there is a extreme weather episode.
Okay, thank you, Dr.
Thank
Oni.
you.
Yeah, I got that in the presentation. And then there's a question from Ava Vieira Viejo. Going back on the presentation on climate risk sensitivity sectors, Gabs, is that a presentation from Sir Ed, or from, yeah, this from Sir Ed? What does the rate mean in the illustration?
Sorry,
What does the rate mean in the illustration?
the rate.
Yeah. So there's like some ratings. Is that what I think that's what it,
Oh, this is
it means?
a symbol of the hazards. This is for earthquake, for flooding,
Ah,
typhoons. So this is for drought. This is for temperature rise. So from these types of hazards, some sectors are
okay.
more sensitive to a
Ah,
particular hazard. So
mm,
for agriculture, for hydropower, for example, they're sensitive to water rainfall,
mm-hmm,
water
mm-hmm,
variability, drought, for example. For temperature rise, uh, the affected sectors would be power, no? Especially
mm-hmm,
thermal plants, and also
mm-hmm,
agriculture because of outdoor labor, but
mm-hmm,
also construction, tourism. These are mostly outdoor types of activities. So these are affected by temperature rise. So productivity suffers when there
mm-hmm,
are uncomfortable temperatures. So and so
mm-hmm.
forth and so on. Mining is affected by extreme flooding, and also by rainfall, and also by earthquakes. So
Okay. Yeah, so I think that's yeah, I hope Ava, that answers the question, and thanks Sir Ed for clarifying. Uh, okay. Sir Jojo, I have a question, and this is related to what Sir Andy Nanagas mentioned as we reach the end of our webinar. This is relatively a new area for bank personnel who are more trained for financial transactions and planning. You know, this whole talk about climate-related physical risk, climate-related transition risk. How did land banks start? You know, and how did your department start specifically
Yeah,
for land banks example?
I think in 2004, Land Bank realized the importance of considering environmental impacts of projects financed by the bank. So through the credit policy issuance, we provided policies to protect the environment and also protect the image of the bank. Because if there are pollution or some adverse impacts of the projects to environment, which is financed by the bank, it usually affect our reputation, or it is one of the reputational risk for the bank.
Was there anything related to the expected credit losses due to this thing, just due to these extreme weather events? That's the reason why the bank did so and built the capacity from 2004, or is it more on the reputational and on the reputational side?
Yeah, the bank also realized the significant impact of climate change to our project, particularly when we experience the Haiyan typhoon, wherein most of our project in Leyte and Samar has suffered major losses, and some of which our lending centers restructured most of the loans affected by that strong typhoon.
Okay,
But we
thank
also
you.
have a program for restructuring the loans of our clients who had been affected by natural calamities to enable them to recoup or to recover from their losses.
Okay, thank you, Sir Jojo. And then I think we're down to our final two questions. And this first question is for Dr. Oni. According to Sir Amador Akpan, they tried to use the rainfall index in their ECL modeling, especially for the probability of default. But they could not find any correlation with the non-performing loan ratios. Are there any areas in the ECL model that we can use? We can use as index, or is it a case-to-case basis?
Yeah, definitely. Okay, definitely, it's a case-to-case basis. So, the one thing that we should remember is that it's not the rainfall index per se that is have an effect on in our study non-performing loans, but the growth of the rainfall index, or deviation of the rainfall index on non-performing loans. That's one. So probably you should tweak your modeling. It should be the growth of the rainfall index. And remember that the rainfall index is a deviation from yung extreme na siya. So most probably in the case of Mr. Amador, baka hindi pa siya extreme, right? That's why it doesn't have an impact on the probability of default. So medyo i-tweak lang siguro yung correlation, yung specification ng rainfall index.
All right. Thank you so much.
We can discuss bilaterally. Yeah. Discuss bilaterally. Yes, it's
Thank
a
you so
technical question, right?
Yeah, thank you, Dr. Oni. And this is related as well. The last question, I know we're on top of the hour, from Sir Andy Nanagas. We at the Greening the Banks do exist basically just to help you build capacity We are really delighted to welcome more than 400 stakeholders still staying in our webinar today. 130 plus of you, 30 plus from the commercial bank sector from our previous webinar. And we are here to provide support and build capacity so that you understand this new situation, this new reality, and these new concepts and tools and resources together. But I'd like to give this floor to Sir Ed to describe more on the courses that you have in mind so that our stakeholders can know more about how to access it.
Thank you, Marlon. Just to plug, we have compiled a rich set of materials from the 9 sessions we've done in the last 3 months, inviting speakers from different organizations, notably international organizations, to share about the best practice of what banks are doing in this space. So we have UNFFI, UNESCAP, CDP, many of the big WRI was also part of that. So we've recorded all of this. We have the PowerPoints, and we thought of developing an e-course for Philippine banks, where it will be integrated with what is now being required by the circular, how these tools could be used for them to comply with developing their sustainable finance framework. So this course is more of a how-to. It's not the what course or inform-only course, but it's a performance-based course, meaning at the end of the learning objective is really to walk the bank through, the persons through the development of their finance frameworks, including mapping their sustainability impact, setting the metrics and targets, engaging their clients, and disclosing their performance through their annual reports. So through those modules, hopefully this will help the banks, especially the smaller banks, to be able to have meaningful have at their disposal these important tools that they could use, such as what we presented in this webinar. So we'll be announcing this later on as part of a future webinar.
Okay, thank you, Sir Ed. And I know we're already 5 minutes. We're 5 minutes behind. What do you call it? Over time. Okay, but Gabs, can you go back to our framing to our framing slide so that people can connect with me as part of a continuing dialogue with you all. Thank you to the 400 plus stakeholders. Thank you, Sir Ed, Dr. Oni, Sir Jojo, for giving your time and your insights in this successful and important dialogue. And as Deputy Governor Chuchi Fanasher mentioned earlier, she's really calling everyone to step up, to begin the journey and build capacity. On behalf of Allotrope Partners and our partners, the Bangko Sentral ng Pilipinas and WWF Philippines, thank you everyone for joining us today. There were a number of high-level concepts shared today, but don't worry, as we will be sharing a synthesis and key takeaways of the discussions within the week or next. And as mentioned in the chat box, we will just ask permission from the resource persons to share the presentations. Tackling climate change, especially as it becomes a systemic risk to the financial system, starts with awareness and ambition. And we hope the knowledge shared by our industry leaders have increased our collective awareness and inspired us to proactively manage these risks while capturing the opportunities. If you wish to contact me and continue the conversation, I can be reached via LinkedIn and the email indicated here. So on behalf of everyone involved in today's webinar, from my team and WWF's team and Land Bank and the Bangko Sentral ng Pilipinas, thank you very much, everyone. Keep safe, keep healthy, and see you next time in our next online convening. Thank you very much. Maraming salamat po.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. Bye.
Bye.
Thank you. Thank you, Ma'am MC. Thank you, Ma'am Bang. Thank you.
Congrats, everyone. Bye-bye.
Bye-bye.
Bye-bye.